Starbucks stock ticker SBUX, is currently trading at $107.09 per share. And this is actually a company that's up over 12% over the past year. And we can see over the past month, they're up about 1.56%. So they did partake in that little recent jump we saw in the month of January. And this is actually a stock that I do already own in my portfolio. I'll go ahead and zoom in here just a little bit. And if we come down, you can see I'm actually already up about 35.81% on my Starbucks position. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if at its current price, it's still a stock we should consider buying. And obviously we'll be looking at 4 different valuation models. We'll be looking at grams, a discounted cash flow, a multiples valuation, and a dividend discount model. And all of this will roll into our output tabs. Let's go ahead and jump over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But okay, let's go ahead and come up here and plug in the stock ticker for Starbucks and hit enter. And you can see all of this data will automatically load in. We're currently looking at the 365-day change chart. So you can see there's a pretty big drop leading to a big opportunity. And since then, there's been a huge run up in the price. And if we come over here and look at the dividend data, we can see they're currently paying out $2.12 per share, which gives them a starting dividend yield of right at 2%, with a payout ratio a little bit higher than I typically like to see it, but it is a safe dividend at around 69.1%. Let's go ahead and jump over to Seeking Alpha and dig into this dividend data just a little bit more. Now keep in mind, Seeking Alpha is also running a 50% off sale at my link in the description. So if you're interested in Seeking Alpha, definitely check that out. But if we come here and look at the dividend grades, we can see pretty poor dividend grades, and some of this I actually don't agree with. I think the dividend safety is going to be a little bit higher than D-. I don't think that dividend is at risk. Starting dividend yield 2%, obviously not super high, but the dividend growth has been really good for this company. If we go ahead and jump over to the dividend history tab right here, we can see they've been increasing the amount they pay in dividends for 12 consecutive years. And if we look at the past 10 years, we can see in 2013, they were paying 11 cents per share every single quarter. Jump forward to now, and that is now 53 cents per share quarter. So I think that's really good dividend growth over that time period. But let's go ahead and jump back over to our stock screener. We can see analysts currently have a target price of $110 per share, institutional ownership around 72.1%, and a beta of 0.92. So you should see slightly less volatility with this stock than you see in the general market. But let's go ahead and jump over to our first valuation, which will be Graham's valuation. And if we come over here, we can see the formula Benjamin Graham lays out for us to calculate intrinsic value. So we need to plug in our variables. We have our earnings per share, and then we have our growth rate projection. And the projections for Starbucks have actually been starting to rise as of late from a lot of analysts. And I think that's because of their recent earnings call. Wall Street seems cautiously optimistic that Starbucks can return to its prior strongest growth in the past. So if you look at some of analyst projections, that growth rate is starting to climb higher and higher. Now we also need to plug in the current yield on AAA corporate bonds. And at the time of this video, it's sitting at 4.45. And so when we plug all of this in, we come to an intrinsic value of $65.50 per share. That's quite a bit lower than the current trading price. And that's mainly due to the lower earnings per share for Starbucks. Let's go ahead and jump over to our discounted cash flow analysis. And again, we're projecting a fairly high free cash flow growth rate for this company moving forward. We then take the present value of those future free cash flows and add them together here, add the company's cash and cash equivalents, and subtract out their total debt to get their equity value. We then divide by the shares outstanding, and we come to a discounted cash flow price per share of $89.81. Now, we do need to take note that the cash and cash equivalents position for Starbucks has decreased quite a bit over the past year, while the total debt levels have remained the same. That's not necessarily something we like to see. But let's go ahead and jump over and look at our multiples valuation. And the idea behind this valuation model is we should be able to value a company based on how the market is valuing companies that are similar in structure. So you can see we're taking companies like McDonald's, Yum Brands, and Domino's Pizza. We're taking their stock price, dividing by the earnings per share to get that price to earnings multiple. And you'll notice all these companies have rather high price to earnings multiples. So we take the average, which is around 29.6, multiply that by Starbucks' earnings per share, and we come to an intrinsic value of $82.75. So that's a little bit lower than the current trading price. So what does that mean? Well, if we look at the average price to earnings for these companies at around 29.6, jump over to our stock screener, we can see the price to earnings for Starbucks is 37.16. You won't see a whole lot of companies that are that high. So a little bit of an indicator according to our multiples valuation that maybe this value or maybe this company could be slightly overvalued. But let's go ahead and jump over to our dividend discount model. And you can see what we've done is we've plugged in the historical dividend quarterly payments for Starbucks so we can see how much they pay out each year. And this allows us to see our year-over-year dividend growth rates. And it's been really good for the company over the past few years, like we've already discussed. 13.89% growth, 9.76, 8.9, and 8.16. That's an average growth rate of 10.17% over that time period. Really solid dividend growth. So moving forward, I'm projecting a dividend growth rate of 6.5%, a discount rate of 8.25%, which gives us a dividend discount model price per share of $129.02. And I've said this before in my videos, but anytime you have a dividend discount model where you're projecting a fairly high dividend growth rate, you want to check two things. You want to make sure you're expecting growing free cash flow, which in this case we definitely are. And you also want to check the payout ratio. And this does make me hesitate a little bit. The payout ratio is a little bit higher than I want to see it to project a high dividend growth rate, but as high of a free cash flow growth rate as we have, I think it should be sustainable long term. So when we jump over to our output tab, we can see our four valuations: grams at 65.5, multiples at 82.75, discounted cash flow at 89.81, and our dividend discount model at 129.02. And so when we average these four together, we come to an intrinsic value of $91.77 per share. Now, the current trading price for this company is around $107.09. But let's say we want to apply a 10% margin of safety based upon that. Our acceptable buy price for this company is around $82.59, meaning it's not quite a company we should consider buying. Now, keep in mind, I think this is definitely a company that's going to be trading at a premium. They have a really strong brand and a really great history of, growing the amount of stores they have in business over time. So anytime you see a business like this, Coca-Cola or McDonald's, typically they are going to have a slightly higher price to earnings. But even with that intrinsic value being around $91.77, a little bit below that current trading price, keep in mind, over the past year, there were definitely opportunities where the company was trading in a really good range where you could take advantage of that intrinsic value, just like I did, which has led me to see over 35% growth in this position. So no, while I'm not currently planning on adding Starbucks at its current prices, I definitely look to take advantages when this company drops into that acceptable buy range. So there you go. There's an analysis on Starbucks stock. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.